And now we're going to be getting into our main topic for today's episode, which is understanding real estate tokenization. Now, Kyle, I think before we tell our viewers about how this amazing technology is going to change real estate as we know it, I think we got to give them a little bit of an overlay of how actually the industry is today and really how broken and archaic I think it is.
Absolutely. The real estate industry is one of the largest industries and asset classes worldwide. I was reading a report recently that cited the industry to be nearly $280 trillion around the world.
Wow.
And yet it's still super analog. And that has a lot of cascading issues across the industry from an investor's perspective as well as an issuer's perspective. And I think that we can dive into some of those today.
Yeah, I mean, it leads to like a lot of problems. For example, it's very difficult to invest into real estate. First of all, you usually need to know of an opportunity in the first place. And then second of all, you usually need a lot of capital in order to be able to make that investment. Usually a lot to the point where it's exclusive to only being a accredited investor or someone who's really wealthy, or to the financial institutions in the financial world. So this prevents a lot of people, I think, from being able to access and invest in real estate in the first place, don't you think?
So you start with that access piece, right? That's from the fundraising perspective or from the sale perspective. But if you own a property, there's also huge issues. Like with the secondary market, it's super illiquid real estate. You know, maybe if you're in Miami here, it's a little bit better than other places. But the reality is, for the most part, you can't just convert it quickly to cash. You got to find someone to sell the property to. You got to actually engage with that person. And as we mentioned, it's analog. So you got to do everything with paper, and you got to work with all these different pieces of the puzzle. And there's just not a streamlined, easy way to make this transaction happen in a smooth way in the traditional opportunity.
Real estate is often seen as one of the easiest ways to grow your wealth as an individual. However, to many people, it ends up looking a little bit like a trap where they get stuck into one place and they're potentially not even earning any money in the long run on their investment. That's why being able to diversify and access more investment opportunities with a smaller threshold and diversify your risk overall is a much better way to grow your wealth in real estate. And that's why we believe tokenization is one of the major trends for blockchain, or for real estate, I should say.
Yeah, so let's dive into that. Why would you want to tokenize? Well, when you're investing digitally, it really makes it much easier for a lot of these processes to happen, right? When you're investing digitally, you have your compliance updated and online. That can be transferred from one place to another much smoother. And then when you're talking about the tokenization aspect of it, you can automate that process to update the capital markets and the secondary market to allow this stuff to move much more effectively. So that's the first place to start.
Yeah, and actually we saw this as a trend already as of 2012 when the Jobs Act passed, enabling companies in real estate to raise capital online. We saw a slew of different crowdfunding portals launch, and their focus was real estate. They helped create access for thousands of investors to billions of real estate. And now with tokenization, I think you can argue that you can even go a step further and program in the compliance for international investors, like companies like Blockhouse, who actually I know from working with them that they're focusing on the Latin American region to bring their offerings to, which is a great use case for security tokens, because a company like Blockhouse before this wouldn't be looking at LATAM for potential investors. Like you said, in this antiquated market, they'd be looking for just one buyer. And now they can fractionalize their investment and offer small pieces to thousands of investors across Latin America.
And we've seen incredible demand for this in put into practicality through Realty. We've covered Realty before, and they've sold now 85 or 90 properties to thousands of investors, for the most part, who are international investors. They're not here in the US, and they're looking to get exposure into US real estate in a dividend-paying property that's going to be able to generate them US dollar dividends. And for a lot of economies, that's super valuable to have cash, to have US dollars in cash, and being able to invest in an asset and to generate that return is something that is just incredibly valuable and demanded from the rest of the world.
So a quick take, before most people didn't invest in real estate because it was difficult. And the ones that did, they were typically focused on their local region. Now with tokenization, more people can invest, and suddenly you're not thinking what's nearby or what can I access in my country. It's should I be investing in Europe or Asia or America or Latin America, and in what types of investment opportunities, right? So there are a lot of new ways that you could now access real estate marketplace thanks to tokenization.
Absolutely. We've seen companies like Mount X that are looking to connect Mexican investors with Canadian real estate. We've got Smartlands, we covered earlier in the show, that's looking to do, they tokenized the UK student housing property. Now they're trying to do real estate in the Ukraine and open that opportunity up for the world. We even saw Keep, which is a company that's doing the storage units that I covered in my section, and they're also trying to do the same thing, selling equity in their holding company of all these different real estate properties.
We see companies and we see people like Shareable Asset as well, right? And Smartlands, I believe, as well, being able to make it so that you can invest in real estate for just as little as $500. So that is a breathtaking amount of just so little money to be able to invest in real estate, something that typically would cost tens of thousands of dollars in the best case scenario. So that's a really big deal, I think, just in itself.
Yeah, I mean, and if you wanted U.S. investor access to U.S. real estate, we've seen the St. Regis. It's a hotel in Aspen, and that's been successfully tokenized, and that's listed and trading on T0. And so they've been incredibly successful now, listed for, I guess it's been on there for 6 or 8 months at this point, and have really helped to prove that concept and demonstrate that there is secondary market demand.
That's right. Commercial real estate specifically, even more so than residential, is typically seen as a liquid investment. You're investing in some real estate where typically one major vendor or player, corporate, commercial property would be owning that land, paying you interpreting. St. Regis is a great example of something that when you invest in that, you're expecting the dividends and having a great hotel year, but you're typically not expecting an easy way out. Now, thanks to T0, any American can easily access St. Regis investment opportunity, and they can easily get out. So that was the true example of secondary markets, thanks to tokenization and blockchain, making this possible.
And the investor side isn't the only benefit of tokenization. We also see from an operator side, there can be tremendous benefits of leveraging blockchain technology,
Absolutely.
often for automating a lot of these very manual processes. One example might be dividend payment. If you're looking to pay dividend to your shareholders and you've got international shareholders around the world that are investing in your property, that's going to be quite an expensive undertaking to be able to make sure that that asset is then wired to the bank accounts that are needed, or however that process might work in managing all of those shareholders. And fortunately with blockchain technology, we can automate that process with smart contracts to allow for that easy, streamlined payment process for all shareholders involved.
Suddenly, sending tens of thousands of individuals actually their dividend can be done instantly, programmatically, actually very cost effectively as well compared to the traditional banking system. That is just, again, absolutely unheard of when it came to the world of real estate investing.
Or you could track compliance and enforce that, right? So again, when we're talking about having international investors on your cap table, making sure that the KYC, the Know Your Customer, and the AML, the anti-money laundering, making sure that those processes, the identification information of those investors is tracked and managed over time, right? So that you know who is actually owning these properties, who is owning the asset that you as an issuer might have given out. And especially important for if there was ever a situation where you needed somebody to get involved and audit that process, you could get a very clear observation of the cap table, see who owns what to make sure that everything's happening compliantly. That's incredibly important.
Huge, and actually leads to a lot of other benefits too, because when that's all digital, it makes it much easier to go ahead and leverage your property. Go ahead and find a lender who can understand the programmatic history of the asset underneath, create almost instant valuation mechanisms to go ahead and offer you an instant loan against your token. So that is an opportunity to collateralize, just like you gave with your example earlier in the top 5 with Maker, to go ahead and use real estate tokens for leverage. And this was, again, typically something that was exclusive to the wealthy who had large portfolios of real estate, or something that you were forced to go and leverage a mortgage for through your bank. Now a lot of new financial services players can come into the scene and offer you, again, potentially globally, options for you to leverage in different terms and different rates. And I think another really cool example that's worth sharing that you should know, viewers, is that a few years ago, there was a Harvard Business Review case study where actually Fluidity, which is an issuance platform out of the United States here, came up with something called the 2-token waterfall structure. And I think this is super neat because essentially if you want to give somebody a loan, someone wants to borrow money from you and put up their real estate as collateral, in this case via a token, you would want to make sure that you actually can claim your token in the event that that individual defaults and does not pay off their loan. Well, of course, traditionally, this would mean that you may need to bring lawyers involved. You may need to bring them to court. There might be all kinds of seizures and issues. But when it comes on chain, it actually is instant. So because it's programmatic, when the individual borrower misses their payment, programmatically and automatically, that equity, which has also been tokenized, go ahead and is given to the actual lender. So that's an instant reclaiming of their collateral that they now deserve, of course, given that the borrower failed to pay. So these are new facets of finance that are absolutely going to disrupt and change the way we understand real estate.
The one other cool structure that we've seen and covered on the show before for any longtime listeners is Rayno's model. And with Rayno, what they're doing is they're selling commercial real estate, but here in the US, there's a 12-month lockup period on an asset that you invest in as a security token through the crowdfunding regulations. And so because of that, you've got this 12-month period where you're fully illiquid, same thing as we've seen in the traditional markets. And with Rayno, what they've actually been able to do is offer collateralization or a loan for that property over that 12-month period, where you can actually get up to, I think it's like 70 or 75% of your investment back into cash for that 12-month period. And then once you pay off that loan at some point, then you would be able to get your asset back and you would be able to receive those fully liquid tokens that you could then take to the secondary markets or then could hold on to or collateralize through a different protocol if that's available at the time. So that's a super interesting model as well. And there's a lot of firms around the world doing some great things with tokenized real estate.
Absolutely. I don't think the innovation is going to stop here. I think we're going to see a lot more firms enter the space. I mean, this is, again, I think you probably understand, hopefully now after this segment, why all real estate, at least in our opinion, is eventually going to get tokenized. And some of you who are watching, they may be wondering, we bring up this concept of property tokens or title tokens, and the idea that not necessarily you need to invest in real estate via a security token. And so I think we should take a minute real quick. I'm going to try to describe the difference. Because typically when you're investing through one of the many players that every single company that we just mentioned to you, the way that you invest, except for through Maker, is actually through what's typically called a special purpose vehicle. It is a company designed to manage and operate the underlying property. And instead of tokenizing what would be the deed representing the ownership of the property, you're actually tokenizing the shares and therefore selling the tokenized shares out to the market, giving investors exposure through the vehicle that owns the deed.
Right, so it's like business interest in the real estate property.
Exactly.
Right?
And why do they do this? Well, because deeds are difficult to fractionalize and to manage. They're built on archaic regulation, and it is very, very difficult and typically different by jurisdiction how to manage their title system. The whole thing would need to be on the blockchain. And so we saw an amazing use case with Maker. As we said earlier, we don't know quite all the mechanics about the regulatory functions or necessarily, how the different centralized parties are involved, but we do know that there are definitely centralized parties involved in making this whole thing possible. And so we're going to need a lot more change, hopefully, as we potentially eventually see all deeds themselves get tokenized, which yields a lot of different opportunities. That for sure is another main topic episode for down the line in another episode. But I wanted you all to have a good understanding of when we talk about real estate security tokens, most often and typically we're talking about them in the form of investing in a business that owns that real estate.
Yeah, so if you want to check out any tokenized real estate properties that are trading on the secondary market, you can go to stomarket.com, see the prices there. I think it's up to 15 tokenized real estate properties now that are live on the secondary markets between multiple different exchanges and marketplaces around the world. So that's incredibly exciting stuff. And we just will continue to see more of these brokers and platforms coming out, including my company of the week, Blockhouse. And so I think that's about it. That's tokenized real estate in a nutshell.
Hopefully you all learned something. And with that, I think we can end today's show. Just as a friendly reminder, we do have our weekly breakdown on Clubhouse every Thursday at 5 p.m. Eastern. Of course, if you have any questions about anything you learn on the show, feel free to hit up Kyle or myself on Twitter or LinkedIn. We're very active. And of course, go check out stomarket.com for all the latest news, for all your trading information, and actually sign up for the What's Drippin' newsletter, where every Monday you'll get a great digest of what's going on and another breakdown of another great topic in the space.
So with that, thanks for listening or watching if you're on YouTube, and we'll see you next week for episode 92.